So welcome to the last session. We're going to be looking at the near-term future. We're going to be looking at fintechs and disruption. And I'm joined by my panelists this afternoon.
I'm Nicole Buisson. I'm Small Business Director at Xero. So Xero, we make cloud accounting software for small businesses. And we're also a small business platform. So we've got 700 app partners that seamlessly integrate with Xero. So if you're, for example, a retail business, you can use Xero plus maybe Vend together seamlessly to make your accounting plus your point of sale and inventory work.
I'm Jeff Hurrell. I'm head of our London Data Science Lab at Thomson Reuters, and we focus on partnering with the fintech ecosystem as well as having a lean and agile approach to developing new products and content sets for the big financial services firms.
And lastly, Tom Bull from EY. I lead the fintech sector team in the UK. So our job is to help our fintech clients grow and scale up, which we do two main ways. One, through providing EY services across the whole spectrum of auditing, tax advice, consulting, corporate finance advice, but also, importantly, through our relationships in more traditional parts of the financial sector and looking at ways we can use those relationships to the benefit of our fintech sector clients.
Cool, thank you very much. So one of the things that, the key questions that we started talking about when we first met was, if we think about the near term, first of all, it's the most dangerous area to focus on because people tend to remember your predictions and come back to you on social media, especially when you get it wrong. We looked at two key questions we're going to try and cover in the next 20 minutes. First of all, who's really going to drive this disruption around financial services? Is it going to be fintechs or is it going to be big tech? So just before we start the conversation, let's do a straw poll. In the room, can you raise your hands if you think the major disruption is going to be driven by fintechs? If there are any fintech owners in the room, that is really depressing. What about big tech then? Yes, kind of fair. Undecided? Undecided. There we go, two honest people. So we've got some people to persuade there. Secondly, we're going to look at who's going to get most value, so the flip side of the equation. So do we feel that the large organizations, the large financial services companies are going to benefit more, or is it going to be SMEs? So focusing on the first question, we started off talking about big tech or fintech. And at this point, Nicole said the word fat bag. First of all, I thought she was being slightly over-familiar, but apparently it's a concept. So do you want to tell us a little bit about fat bags?
Sure. So let me maybe talk a little bit about the background to this. So Xero is a New Zealand-based or headquartered business. We've got 1,000 people there and 1,000 outside of New Zealand. So we had Chris Skinner and David Birch, that I understand are two of your UK commentators on open banking and fintech down in New Zealand a couple of weeks ago. And one of the things that Chris Skinner talked to us about was fat bags. And the concept, I guess, is that rather than just having Facebook, Google, and Amazon, there's a whole lot of global tech platforms coming out of China now, and they're the fat bags. So Facebook, Amazon, Tencent, Baidu, Ant, and Google. There we go. Those are the fat bags. So I guess the concept and the word, indicates that they've got a lot of power and a lot of resources and people to invest.
Okay. So do we think this is going to be an either or an and? Are the fat bags going to focus on specific areas? Is that
I think the fintechs have done incredibly well to kind of develop to the extent they have in terms of gaining customer traction. When we look at the market, we think that's one of the really tough things to do is to get traction with customers. And in fact, when we were setting up the fintech team at EY, that was one of the things. We for sure saw the money flowing into the sector, and you can look at the kind of CB Insights numbers and see $20 million a year or so flowing into the sector, in VC funding. We saw the interest from our more traditional clients, and all the CEOs of our big banking clients in particular, very excited to see the kind of innovation happening in the sector. But we were left wondering, are people really using it? And therefore that's an area we've studied in a lot of depth in our piece of research we call the Fintech Adoption Index. And most recently we did interviews with 22,000 customers across the world to really understand the traction that fintechs are getting with retail consumers. That kind of study's online, but really the headline there was we found globally amongst the digitally active population, we found about 1 in 3 people actively using fintechs, as defined by having used 2 or more of those fintechs in the last 6 months. So we see real traction amongst consumers with the fintech offerings. So I think whereas some people sometimes say, well, the fintech sector is very interesting, but those fintechs struggle to turn all that innovation and smart digital design into real customer traction. We now think that thinking's pretty outdated. So I think in kind of weighing the debate, it's really important to take into account how successful the fintechs have been at gaining real customer traction. I think the big techs, they love to build global platforms, and that's been a challenge so far in the way that financial services around the world is just regulated very differently in different markets. Very much more complex product than traditionally that they were dealing with. So I think there've been some real barriers there. But it's the last panel talks about open banking. Maybe these kind of initiatives to open up data and make banks become public API operators. Maybe those kind of functionalities will draw in the big tech players who think that now there are new business models that are appealing.
So if we take end user adoption as the key metric of success, 1 in 3 using fintechs, but how many using fat bags? Suddenly you've got this huge tsunami of sort of customer loyalty where people have got slightly more wary of some of them, but they have fondness for others. And if suddenly you had Google Bank tomorrow, wouldn't people just vote with their feet? And move from the traditional financial service providers into the more fat bag arena, whereas they wouldn't with a fintech. And we've seen the challenger banks kind of having fantastic marketing, but less take up.
Well, I guess yet to be seen, but I mean, those are hugely appealing brands, and you can imagine that would attract huge excitement from customers as well as potentially adoption as well. I do think banks. Although perhaps after the crisis, the banking sector lost a certain element of prestige that it enjoyed before. I think in some ways we do kind of trust our banks still in the way they are able to look after money and data in a way that has been pretty unassailable in the last few years.
There's big regional differences in this, right? I mean, if you look at Alibaba and Alipay and then Ant Financial, those things, there seems to be a more adoption of payment systems and banking in those markets. Whereas here, the stat still holds. You're more likely to be divorced than you are to change bank, right? So in terms of retail banking, I think it's one different situation. And it's culturally different as well, right? There are far fewer retail branches or retail banks in the UK or in Europe than there are in the US, for example. And so it's not a one-size-fits-all. I want to come back to your question around the big tech, fintech thing. So a really clear example, right? So in the pure tech space, in the area of graph technology, we do a lot of work at TR in. There's a firm called BlazeGraph, had a great graph platform, but it really didn't get a lot of adoption, right? And even for good things like financial crime and fraud detection, did some consulting work, but not adoption. As soon as Amazon essentially acquired them and acquired their IP and acquired their people, all of a sudden everybody wants to get onto now what they've rebranded as Amazon Neptune, and there's a huge number of people getting onto that platform. So if you're purely in the technology type space, you will get eaten alive, I think, by the kind of big techs. But if you're focused on the data for financial crime or AML or transaction monitoring, and you really understand that niche use case, then the chances of disruption are much, much smaller by those big firms.
So we've seen fintechs being acquired by banks, trying to get competitive advantage, and now we're seeing the fat bags coming in and also acquiring them. Is it just a great time to be a fintech because you're going to retire at 30?
I'm not.
It says none of them in a fintech, but probably an academic ecosystem.
So I think there's different models of evolving, right? Where you're saying, okay, I actually I'm going to change my business model, and I'm not looking for that direct penetration into the financial services. I'm going to become more of a platform. I'm going to ride on the back of the big tech. So my system works in Google Cloud. It works in Amazon, right? So web service. So you're using those as your kind of accelerator. So that's a really exciting thing to be able to do. So you don't have to own all that engineering problem to the same extent you used to, and you can really focus in and narrow in on the real customer problem that you're solving as a fintech.
Do you think that the marketing ability of the large tech companies is just so fantastic and omnipresent that if you have something that is going to compete with the large techs, you're never actually going to get a foothold, even if you have like the Betamax Beta solution?
I think we see that, right? I mean, Google will suddenly open source something, or Facebook will open source its cutting edge NLP engine or something, and your whole value prop is gone.
Yep.
But if you look at a company that we've done some work with, it's in the Barclays Rise incubator, Selden, their approach is going, okay, we really understand the machine learning, but from the trading perspective, and how do you do the governance model, and how do you do the sign-off, and all the things around machine learning that matter. So they're still going to use TensorFlow, and they're going to have that acceleration effect, but they're providing something that's of unique value. So it's just that change, that shift to kind of benefit from both.
Correct.
To this point, there are sort of niche applications, right? The fat bags can't do everything. The reason startups exist is because they fill niche gaps. They fill parts of the jigsaw puzzle that maybe people aren't focused on. And I think we all feel the world is getting faster and faster and faster, and people are creating things faster and faster. So I believe there's still a real role for fintechs. And then you can even think as well about, could it be fat bags versus banks plus fintechs collaborating? So you've got fintechs that can innovate quickly, develop MVPs quickly, get things to market, have beautiful customer experiences. And then on the other side, you've got banks with customers and distribution channels. They can't work independently. They have to work together.
So at the moment, we think about the big tech versus fintech debate, and we think about the banks trying to move in to monopolize or capitalize on the fact they've always had that direct engagement with the customer, where they're controlling the customer experience. But across retail, commercial investment, banking, that's never really been something people have waxed lyrical about. They've never been really happy about the experiences they've had with banks, with a few notable exceptions. Do you think that this means that we'll find the banks will be threatened by big tech rather than look to collaborate with them, because the customer experience delivered by tech companies tends to be front and center and a lot better than banks?
There's a quick example. So I was in Hong Kong a few weeks ago. We sat down with HSBC's sort of digital banking team there. It was really interesting. So they've kind of pulled them out of the head office in the mothership, and they're sitting in a WeWork in sort of downtown Hong Kong, and they've really challenged the status quo. They're providing banking services, but into the kind of dominant social media messaging platforms that people are on. So that's a challenge to the culture of the bank. They're adopting the kind of fintech way of working, and they've hired people from fintechs to do that. And again, the branding of HSBC is quite different in how they're servicing the customer, but they've realized that's where the customer has moved to. I think that's quite innovative, and I see that's the kind of approach that the big banks are taking, who still have enormous, they're the biggest technology budgets out of all. HSBC announced, I think, $12 billion of investment the next 3 years to compete better in China, for example. So they have huge amounts of spend in that area, but that doesn't mean there's no room for the fintechs. I think it's a different.
No, I think some of the fintech and challenger banks have been raising the bar in the UK in terms of the customer experience that's available to the retail banking customer, and there's some of the best apps in the market, and that's kind of a challenge to the banks. But the banks innovate quite quickly, and they're really not like Blockbuster Video. They innovation teams and big investment and thinking seriously about customer experience and journeys and how to transform that. But I do think open banking in the UK presents a big opportunity as well, in that it's going to effectively force banks to become operators of public APIs that offer the customer their transactional data, so that can be easily ported and given to third parties, and also the ability to initiate payments outside of the banking app. which has never been possible before. And when you put that together with the amount of product reference data that's available in the market to kind of understand the product landscape, what effectively you get is a massive range of new possible products you could get. So you could integrate your bank transactional data into Xero, which you can in many markets, and as a small business never have to do a bank rec again, bank reconciliation, or you could offer customers point of intent offers through using their data in analysing their financial situation, or offer them an app to always find the best rate in the market for their money, and then one click, you can move your money to get the best rate. I think there's just so much new possibility when you put together those building blocks of functionality that open banking offers, that it's going to be a really interesting time. And the primacy of those customer relationships that the banks currently enjoy is somewhat under threat by third parties being able to operate those tools. But equally, the banks enjoy, frankly, a lot of trust with their customer base and quite a historically sticky relationship. So I think the banks are well placed as well and equally able to tap into those APIs from other banks. So it's going to be an incredibly dynamic market as that, and it's kind of a new initiative, but beginning to really take hold.
So thinking about open banking and disintermediation on one side, and on the other side, you've got the wealth of fintechs. This, if you look at people like Medici, who look at the number of fintechs that are hitting the market, it's almost mind-boggling the number of fintechs out there. A bank's going to get into a situation where they have a very clear view of how they're going to maintain that primacy of relationships, or are they going to get into a position where there's just analysis paralysis, where there's just too much going on? How do they make sense of the new world?
Well, there's literally thousands of fintechs. I'm sure that the barriers to entry in financial services globally have never been lower than they are today, and hence we see those thousands of fintechs popping up globally, and they're very different than more traditional firms. Very capital light, legacy free, highly scalable, very digitally geared up. So I think increasingly the banks are looking at those fintechs and thinking, well, we don't need to invent everything. There's lots of innovation here. We can kind of source and partner with these new organisations and bring that for the benefit of our customers. So I think the banks certainly are thinking strategically about the market and looking to reserve those, the primacy of those relationships, but looking to do that by working with innovators, not necessarily needing to invent everything.
Okay, great. So I think before we go back to the audience and check again to see if we've swayed them in any particular direction, Jeff, Nicole, is there anything else you want to add? Nope. Grand. Nope.
Well, if you want to have questions now, is it?
I think we're just going back to the vote, and then we'll go on to the small or large.
Okay.
Yeah, great. So can we just have a quick show of hands, please? Or phones, if that's in your hand. Fintechs, are they going to be more disruptive? God, there we go. Yeah. They're the fintech owner. And keep your hands up if you own a fintech as well. Oh, there we go. Fat bags, not something that's probably been said on a podium before. There we go. No one thinks of fat bags. That's great. So let's get into as we come into the closing bit of the roundtable. We're talking about who's going to benefit from disruption. Is disruption going to become skewed more towards the SMEs or the large enterprises, the corporate megaliths? So I think this is definitely a Nicole question.
Sure, absolutely. So at Xero, we focus on small businesses. Our purpose is to help small businesses to grow. And we notice often in their banking relationships there can be a little bit of pain. For example, if you start a small business, you need to get financing. And today, if you go to your bank to ask for financing, it can take a really long time, 6 weeks to get something processed. It can be very paper-based, taking sort of up to 35 hours to fill in a loan application. And we're seeing some pretty exciting things with alternative lenders that are pulling data out of our API to make lending decisions based on that. So that's something that's pretty exciting that we're seeing out there in the market. So there's a whole lot of innovation sort of in that lending domain that's going on. That said, 80 to 90% of lending is still done by banks. So we're really excited about the prospect of how we can work more closely with banks in the same way.
And is that predominantly focused on developing markets, or is that across all markets?
It's across all markets.
Excellent. So, Jeff, from your perspective, large enterprise or SMEs, which one's going to come out the best?
So, from my perspective, we predominantly work with, again, large financial services firms, and I guess what we see there is outside of this sort of retail banking space for fintechs to kind of penetrate in and bring their services into those banks where those big budgets are, right, to help grow and really disrupt some very kind of stodgy kind of markets, or is it capital raising? Is it IPO? Is it the debt capital markets? Is it trade finance and lending? Is it the kind of sales and trading stuff? And there's a huge appetite for innovation. And what you see there is there's no clear pattern, right? Even quite small big financial services are much further ahead than perhaps some of the larger ones that are in the UK. And they're doing that through having things like, every new build they have to have some fintechs on the kind of, RFP, right? So even if it's an internal project, they have to bring in that insight. And one of the things that we've seen is we want to we're helping them to lower the barriers, right? So if you're a fintech and you want to kind of get into those markets, you can use the kind of Thomson Reuters platform to bring your content and services in, so kind of bypass all of that kind of bureaucracy. And so the benefit there and the kind of value is kind of shared, right? Because the bank is doing something more efficient, right? For us as a vendor, we're sort of bringing in new value into our customer, and for that innovative firm, right, they're able to kind of find, not just do consulting work with, 1 or 2 or 5 of these firms, but kind of spread that much more broadly. And I think that's where the real benefit is, and I know you wanted to say, who's going to win and who's going to lose. And potentially everybody can win if you do this correctly. So
that's not how life works. So your Trojan approach, where you're helping fintechs actually penetrate these large monoliths, that seems to reflect the fact that actually engaging with the procurement arms of the large banks is still absolutely appalling. Have we seen any techniques or any tactics or any sort of governance shifts that are going to lower the barrier on the procurement front?
I think just avoid procurement completely, really, is my advice on that one, right? I mean, so what we've seen is, in the last, I guess even the last 6 months, used to have chief data officers getting hired. And now they've been subsumed by kind of GDPR and compliance type stuff. And then there's a new wave of chief AI officer or chief machine learning officer and stuff like that coming in, who are sitting much more closely to the different business units in the banks. And they're really hungry for results. How do I show results quickly that I can really transform the business? A lot of the stuff they're looking at, though, is process automation. How do I pay bills more quickly? How do I do the kinds of things that Xero is helping you to do for the small business, but at a larger firm? So they're looking for those opportunities, and it's just finding those avenues in. And then you avoid the procurement piece and you can get past it. That's what we see.
So we're seeing the rise of chief AI officer and the demise of a supply chain department.
The market data department being,
cost reduction.
Cost reduction. That's what we see. We see a lot of pressure on our business because of that, obviously. This is why we're trying to change that.
But we also see the rise of a lot of innovation hubs that have slightly less restriction on who they deal with. And they're actually encouraging investment, and they're encouraging sort of people coming from academia as well as people who've actually made that leap and they've started their own fintech hub. So have you guys had any experience with sort of innovation centers?
Yeah, I think there's a common trend across the industry, heads of innovation departments. It's always a kind of a tricky balance. How much do you try and centralize innovation? And does that mean no one else can innovate if the head of innovation hasn't seen it? I think the trick is really, it's kind of a balancing of having some innovation capability in business units and kind of product areas and some central innovation. And then central team has got good overviews of the whole industry. They can spend a bit of time coming to fintech conferences and that kind of thing. But they also then have the support of people in the business who understand the product area very, very well and are able to actually get things done in the organization. I think more broadly, it is kind of tough for a big organization to collaborate with a very small organization, and there's lots to think about to get that right in terms of senior sponsorship and the absolute support of ideally the CEO, in delivering that change, culture, how to support fast failure and kind of more iterative approaches to working, and how do you really get the right kind of brains in the room, because it's amazing how people really open up when you're able to bring in all the smart people in the organisation and lots of smart people in a room. People kind of feel confident to give away a bit of their knowledge and their special understanding because lots of other people are kind of throwing in ideas. And unless you bring all that together, it's really hard to get idea generation going. But I think organisations are beginning to learn this stuff and get good at it.
Fantastic. So I see our little clock has turned red, which means we've come to the end of our period of talking, and now it's your turn. So we're now in Q&A. Do you have any questions for the panelists? We've talked about fat bags, fintechs, SMEs, LEs, the winners and the losers. What do you think we've got wrong?
Well, some questions on.
We've got some questions in there as well. There we go. Would you like to comment on the ethics of using AI writing finance and the impact of possible abuse? Right, that's a very specific question. Yep. And the other one we have is, do you see powerful Chinese or other Asian tech businesses, such as Alipay, moving more aggressively into Western markets like Europe and the US? So let's tackle the second one first. So in terms of the rise of the fat bag A's in Europe, are we seeing Alipay in our daily lives?
Well, when we did our Fintech study, actually the market that came out on top for Fintech adoption globally was China, where it was actually 69% of the digitally active population were using Fintechs. And that's because of the tremendous adoption that some of the big Chinese platforms have enjoyed, and it's kind of different than here in that they're very integrated into social media, sort of function like lifestyle super apps. You can do all kinds of stuff within the app. And as of yet, though, in Europe, really the merchant acceptance is improving. And we see lots of the bigger merchants working with those players to kind of adopt them, but only really for Chinese tourists, in Europe so far. But having built the merchant adoption through that channel, I guess it's going to be quite easy to open up those platforms to European users as well.
Yep, no, that's a great point.
So in New Zealand, we sit on the other side of Asia, so we definitely see lots of Alipay in the market there. So yes.
What has been the main application or the main sort of use case for Alipay? Is it financial services or is it?
For payments primarily,
yep.
I think. So I think we have quite a lot of immigration to New Zealand at the moment, particularly from China. So I think it comes along with that.
So it's mainly retail?
Yes.
Great. Excellent. Fantastic. So we seem to have another question as well. What's the next best thing in the financial industry? I think someone's looking to invest. Who will be the next Uber of fintechs? Without divulging your own personal portfolios, is there anyone you think we should invest in at the moment?
I think there are just so many firms that are fantastic. It is tough to take a call. I'm always just amazed to look at Revolut and see the pace at which they release new kind of product areas, the pace of their global expansion. But I think there are many kind of interesting players to watch.
Yeah, indeed.
So I was just reading a report before I came out here. 99% of financial crime is not discovered, right? And the $6 or $7 billion is spent on people reviewing manually reports of, is this a fraudulent activity? Should I be onboarding this customer? Yeah. All of the stuff. And there's a huge opportunity there. And to me, that's something where there's not a discretionary cost. The banks have to spend that money. It's not like to persuade them it's a problem that they should solve, a real problem. And I think firms working in that area are incredibly interesting, and there's a lot of very interesting firms working in that space.
So there are better returns made from defrauding than investing then, at the moment. That's
potentially. But we did talk about whether if you really want to understand how to solve financial crime, maybe you should hire more criminals into your firm because they'll tell you how it works, right? And you see this if you go. I mean, what I say, but if you look at what's in the dark web, and if you look at the guys who have the expertise in decentralized networks, that's how you have to be thinking very differently. And if you can bring that expertise to solve these problems, which I think fintechs can.
I think there's a big difference between the idea of being more pirate and being a world-class criminal. But great. How are we doing on time? Do we have time for one more question, or we have two more questions? There we go. Okay. Okay. You asked who will win, fintechs or big tech. Who do you think? Oh, thank you. Where's that gone? Yeah. What do you think about the role of traditional players, including smaller financial institutions? So, are we going to see the traditional banks still around in 5 years, or? We look at the landscape here, right? And you had every bank trying to become a massive global bank.
and then you've seen this huge retrenchment now to regional banks and even Deutsche Bank, right, saying, right, we're not going to be in these whole areas of trading, these whole markets we're going to pull back from. And you see there's a lot more selectivity because they have to focus. Every bank is now, there's a couple of major globals, but that regional focus, the growth of boutiques, you see it in investment banking, the kind of mega boutiques for M&A and advisory have done really well because of that focus. And I think you will see firms that are very focused on a particular market or a particular segment being much more successful than the huge guys who just can't, even now, Deutsche Bank is still trying to, as an example, roll back from its, earlier plans for global expansion. So I do think, though, you will see a kind of a much broader, mid-tier, and I think that's more opportunity for everyone.
So what does this mean for the smaller players? If you think about the regional building societies, savings and loans in the UK, their budgets are much smaller and they're approached much less often by fintechs, disruptive fintechs. Is there a diagnosis or a prognosis for that sector?
I think everyone is, or most of the players we talk to, they're really very focused now on just bringing the best product to their customers while maintaining a relationship with them. And I really think this will support the drive of the growth of kind of the marketplace model, where through some kind of app store or through some kind of marketplace, it's quite easy through your provider to access a whole plethora of different products from the best in the market. And I think for players who go down that route, the need to kind of build again everything in-house, build the best product in all respects in every market just won't be there, and they'll be able to build connectivity in a way we haven't really seen in the sector for a while, and I think that'll support the rebirth as well of the kind of bank assurance model where a bank becomes more a kind of bank-like organisation, becomes an important provider of insurance services, again operated through a marketplace. So I think there's probably quite some attractive features of kind of partnerships through that medium as well to support.
Okay. So it's going to be more of a transformation and a reinvention rather than a disappearance.
Yeah, I think so.
That's too much brand equity. Grand, excellent. Well, I think the red timer has now gone violently purple. So I think we've definitely come to the end of our time. So I'd just like to thank the panel, Nicole, Jeff, and Tom for joining us. And thank you very much for attending the very last session of the day.
So thank you. Thank you.